Welcome to Trading Lounge and the European indices for the 4th of December, starting with the DAX on the daily chart here. We are looking at wave 3 high here on that spike with an A and a B and a C here for wave 4. We know wave 4s can get rather complicated, so this wave 4 could get more complicated in this space here, but it is sticking to this major trading level here of 13,000, and we can expect it to do so while the US market is playing out through its correction and has further to go. So in this particular case here, it's possible that this particular correction is actually finished in terms of wave 3 here, an A wave, a B wave, and a C wave here for wave 4. The 38.2% retracement level is actually lower at 12,800 thereabouts. But we do have 5 waves from B to C here. But what we would need to see to have evidence of this being in place now is an impulse wave to the upside. So we'd want to see a 5-wave sequence moving to the upside here, and we just don't have that yet. So realistically, we could short below this low here. Well, we could short if the 13,000 became the retested resistance at that point. So let's just go in and have a bit of a look at this here. So the A wave, the B wave, and the C wave. Yes, it does look like 5 waves here, and it does look like it's taken out the top here. But when we look at the actual physical market, the cash market, this is it here, where we have this is the high here. So looking for an A and a B and a C. The 38.2% retracement level on the cash market is a 12,800 roughly, which is a minor level. So yeah, I mean, it could get a bit more complicated and move on down, so we need to be prepared for that. Like I said, we don't have a full impulse wave to the upside here, and in fact it looks a little bit corrective. If we go in and have a look at that on the tick chart here, we'll look at this in terms of this is the low down through here. So first of all, the first move up through here, we got 5 waves in this sequence, and we've got 5 waves in this sequence. We could look at it as an A and a B and a C for the A wave here. That would be 3 waves for a corrective wave, and A, B, C here for the B wave, and then 5 waves up here, which is not finished. We'll look at that in a moment. But on the positive side, if we assume that this wave 4 low is in place here, and that's a bit of a long shot when I compare it to the rest of the markets, but it is what it is. So wave 1 here and wave 2 here, then wave 1 here, and that means that we can copy this and put wave 2 in here for the B wave here. So we'll be able to work this out very shortly, because if this is an A wave here in 3 waves, it will make all of this corrective, okay? So in that being corrective, we'd look at that as the A, B, and C for the B wave here, and then we'd be looking for 5 waves to the upside for wave C here. So if it went past wave C here, if it went past that, then we know that we've got a bigger move to the upside. So we'll be conservative first and look at this as an A and a B and a C wave up here. And with 5 waves, we'll be looking for 1 and 2 here. And then from this wave 2 here, we'll go all the way up here for this wave 3 here. And this wave 4 here, it could pull back to the wave 4 1 lesser degree, which is about here. While wave 4 to 1 lesser degree is here. This is the 38.2% retracement level from that wave 2 to the top of wave 3 here. So that could get a little bit more complicated in here for this, move back a bit further. But really it's vibrating across the midpoint here, which is the 50. So in terms of trading levels, we've got 1, Fibonacci numbers, 2, 3, all the way up for 5. You can see how quickly a market moves, quite quickly between 3 and 5 in both directions, coming in both ways. And then we've got grouped, so we've got 1, 2, 3, 5, and 8 here, but we also put in group 2, which is 65, close enough, and 72 there, close enough, and we normally color that one in with an orange level there, just to sort of highlight, just sort of make it a bit more apparent. So in a nutshell here, if we count the 5 little waves up through here, we've still got 1 more to go here. So it could finish in group 2 here, but markets like to to move up to large numbers, so 13,100, one being the strongest number in the market. So it could extend up that far, I'm not sure, but what we could say is we'll just give it a bit of space. We're looking for 5 waves in this sequence here. This wave 4 may already be in place here on this one, because we've got an ABC here. If that moves up a bit further and overlaps that first move down here, then that would be looking good for a move further up, and we'll be looking for 5 waves to the upside here. And I'm not prepared to go long, but it's too short of a time frame for me. But if we've got a classic trading levels pattern sitting on the 100 here, then we can go long. So a classic trading levels pattern is this here. Let's assume that this is 13,100 across here. So we would need to have the arrival here. This arrival would be the top of wave C here, that finishing the 5th wave of wave C here. So if the market was going to push high, then we would see a reaction from the 100, then a push up from the 100, then a corrective move, and then sitting on the level over here. So that's a classic trading levels pattern, and that's what we would see across this 100 here. So if that was the case, I can't draw on this side of the tick chart, but I can draw over here. It would be the arrival of the 5th wave, a corrective move here, and then up into group 1 here. So 1, 2, and 3 here for group 1, and that will slow it down, and then we'd see some type of corrective pattern across that, and then we'd see the move to the upside. So we can go long on any of these sort of things through here over this side. So that would get your timing right. I mean, the markets are all about timing, and the trading levels and the patterns that occur at the levels are quite minimal, but there you go, they help. So we need this to play out. We need that to finish there. Once that finishes there, we can expect the market to move down. In terms of shorting it, we can put the trend line through here. That would be one way of shorting it through here. You may find another way of shorting it, but what can we do on the short side here? It's not going to help. Not quite sure the best way to handle it because I won't be there at the time. Well, the retest on this over here, so yeah, it's not going to help either, is it? I mean, when it comes up to this point here, let's assume that it's going to get to this point here. So if we assume that, then we'd have that move up there. If it's going to be bullish, we'll get 3 waves there. If we get 5 waves there, then you can short it from that point. So if the market moved up to here and then we saw 5 waves here, then we'd have 3 waves back up. Then those 5 waves, you can short it through there. That's one way of doing it. The other way to do it, I guess, is that if the market plays up in this, if the market builds above the 72 here and plays up in this area here, and then comes back and finds the 72 and the 65 as the resistance, you can short it from that point because it will drop down. If 72 becomes the resistance, it will drop back at that particular point. But be a little bit careful, because if we're going to get 5 waves up here, then the wave 3 and 4 up here are going to be doing a dance in this space here anyway before pushing higher. So you want the market to be up in this space and then come back down and then look to short it at that point. So, because that's what happens, you know, when we're looking at, let's put group 1 in here, which will be 10, 20 and 30 here. So psychologically, when the market comes to this number here, it will use, I can't draw there, I have to draw over here. So it will basically vibrate in this space here. So you have to allow the market to have its correction at the 13,100, and it will do that within group 1 here and group 2 below. But if it finds group 2 here below the resistance, then it's rejecting the 13,100 and will drop lower. If it finds a tested support on top of group 1 up here, 13,130, then the market's going to push up from that point. But it must get support. Trading above it is not support. It must drop back. It must come back and test it. And if it tests it, then you've got that high here to work with at that point up here. So yeah, it needs to be a nice tested support with a classic trading levels pattern at there. Then it's leaving this number. So this group 1 and group 2 in conjunction with this 100 here is extremely important and very simple to understand, but it takes a while to refine it and get the trades right, because you need to understand the classic trading levels pattern and support and resistance and how that actually works. And you can bring the volume into it if you're working with say futures contract or the cash market, if the cash market is trading at that particular time. Rightio. So that's that. We'll have a look at the FTSE. Now the FTSE is a little bit like Hong Kong to China. So the FTSE in relationship to Europe is, doing a completely different thing, so so we're looking at this particular pattern here as an A wave, a B wave, and a C wave up here in 5 waves. So it's possible for this to actually move down here lower to the closer to the 7,000 area here. And in this case here, we need to be looking at, I'm exaggerating here, but basically 5 waves down here in wave C for this to move up from this point. Okay, so there is a case, however, for the bullish side, so don't go chucking tomatoes yet. So it's possible that this is 1 and 2 and then up for 1 and back for 2. This is the 61.8% retracement level from this low to this high here. So it's possible that we can just go straight up from here. Okay, so we need to look at that. We need to understand that there too. But otherwise, we'll be looking further down from this point. So with that in mind, we can go to the 1 hour chart here. And as I mentioned, if this was going, this is roughly the 61.8% mark here. So what we could say is that the move down here is an A and a B and a C wave here. I can bring that in a little bit close there. It looks a bit lonely over there, so pop it there. So it's possible that we can have from wave B here as 1 and 2 and 3 and 4 and 5 here, finishing as wave C here. But we would need to see the market move up from that point. So currently, if we look at it in the more bearish picture, then we'd look at it like this, with wave 1 here, wave 2 here, 1 and 2. Sorry about that. I need to move this over. So 1 and 2 and 3 and 4. So this move here, so if we take this one here and take it down to here, then the wave 4 can move back up into this space here. I don't think it'll move back up that high because the wave 4 of 1 lesser degree is in this space here. So let's just wait a little bit here. This market can move back up into this space here before dropping. So the 72, if you know the trading levels, then you know that this is really important here, the 72 here. So let's just allow that to play out here. If you're short, still short up here, just stay short. Let's just get a bit more of a grip on this one here. On the tick chart here, let's just go in and check this one out because it's probably corrective anyway. So I'm not worried about all of this. I'm just worried about the low here. So I can see here straight away that this move from the current low up to here is in 3 waves, and it is 3 waves simply because this low here has been breached by this A, B, and C wave here. So we can look at this as an A wave and a B wave and then a C wave up here. So the job here is to count 5 waves up here. So we could count this one here as 1 and 2 and 3 and 4 and 5 here for wave 1 and 2 here. That's a bit short for wave 3. So we're going to include all of this in wave 3 here. So Wave 3 would be 5 waves of 1 and 2 and 3 and 4 and 5 here for wave 3. So this will be wave 4 occurring here, and there'll be one more push up into 72, and then it will fail at that point. That's not going to be very helpful on that side, so I won't use that. But yeah, there should be a pullback in here and then one more move up here and then fail from that point. So I think that we're okay for looking at this here as wave 4 here. And it's not going to, probably not going to get up there from that point. So as we just saw then, we can just go to 72 and then fail and move back down into 71 at that point. Okay, so I can see I can count this a bit differently here as well. I'll need to look at that. That's okay, it still gives me the same thing. I'm just going to put that there to remind myself. Alrighty, that's it. Thanks for tuning in, much appreciated. Cheers.